What's going on, guys? Kenney Conwell here, and in this video I'm going to break down the difference between tax planning and tax preparation. So in a previous video, several videos at this point, I've talked about the importance of taxes and lowering your taxes. Arguably, taxes are and will be the biggest expense that you pay. So it's really important that you as a consumer and a business owner have a grasp on how tax management is going to affect your bottom line at the end of the day. And this is really going to be relevant whether you're a business owner or if you're a normal W-2 employee, but it's going to be more applicable to you as a business owner. So a couple of key things to be thinking about if you're not a full-time entrepreneur. Entrepreneurs, you really want to pay close attention to what I'm going to cover because this literally affects your profitability and how much money you can allocate towards building wealth. Now, if you're an employee and you don't yet have a business, I strongly recommend and encourage you to consider starting some type of business, even if it's a home-based business, because it now opens you up to the additional parts of the IRS tax code that you can now start to do to systematically reduce the amount of taxes that you have to pay. So it's really important that you get this because cash flow management, leveraging your credit, and then tax management, once you have a handle on all three of those, you will literally start being able to reallocate those dollars towards what I call assets, and assets are going to appreciate with time. So in the previous video, I covered the differences between assets and liabilities. Take a look at that one. And then also another video, I broke down the differences between the three types of income. I won't get into it in this video because it's about taxes. So tax preparation versus tax planning. You've heard me say this before, and I'm going to continue to say this because it needs to be clear. There is a difference between tax evasion and tax avoidance. Tax evasion is illegal. You can go to jail for that. Everything that I cover and communicate are rules that do not put you in a position of doing things that are illegal to evade taxes. Everything that I communicate and I'm going to communicate to you, and you really want to start understanding the rules here, is tax avoidance. So when you start to really understand that this financial system is just a game and you have to have the rules, then at that point you can start putting yourself in a position to be understanding how you need to make your moves. But you also have to get that they're not going to just hand you the rule book. The way you get the rules is through your education. So tax preparation. Now, this is something that happens every single year. And if you have transitioned from being an employee to an entrepreneur, you may have been one of those employees that was just using your normal accountant or your tax person, and the more money you started to make, you started to realize that maybe this person did or did not know the different strategies that you should implement as an employee, right, or as a business owner. So everything that I cover and I communicate isn't about getting tax refunds. A tax refund, let me spend a little bit of time on this. A tax refund typically means you overpaid in taxes. And you have to think about something called the opportunity cost. So if I'm overpaying money to the government that's not giving me any interest, what could that money have done for me throughout the year? What if I could have put that towards paying on a credit card? What if I could have put that towards my savings account? What if I could have put that towards an investment account? And what's interesting about this, and I'll get into more details about tax prep, is that the IRS actually communicates, and they've sent out memos saying, hey, look, if you overpay in taxes, this is not a good use of your money. And there's other things that you should do. All tax preparation does is a thing that you must do on an annual basis. It's the compliance component of complying with the federal and the state government authorities from your income. So you're always going to have to file a federal return, and then depending upon your state, more than likely you have to file a state return. But all that's going to do is the whole goal of you filing your tax return or tax preparation, that's what I want to say. Tax preparation and your tax return go hand in hand. You have to do this every single year. But typically when you're getting your taxes filed and you're going to that particular tax person, that tax professional, they've got so many other returns that they're going through. They're just focused on making sure that they file it accurately from their standpoint, from the standpoint of making sure that everything checks and the amount of money that you pay in taxes, the amount of money you pay in taxes. So this is why even when you're a business owner, just because your taxes are being prepared doesn't necessarily mean that tax preparation, whether it's a CPA, accountant, an enrolled agent, or just a normal tax preparer is going through your return to figure out, are they helping you maximize every part of your taxable situation, because they've got so many other returns that they're filing. And the whole goal is looking at the past. So they're saying, well, what happened? What did you do? Okay, you spent this much money here. Okay, you use your debit card for here for this as a business owner, whatever the case is. Oh, you got a couple of deductions, fine. All right, this is how much you're gonna have to pay in tax, right? This is your tax bill. Now the conundrum, especially for entrepreneurs, is most entrepreneurs overpay in taxes unnecessarily. And when they get wind of overpaying in taxes, they're like, man, overpaying in taxes, I don't want to pay any taxes, but then they want to go get working capital or a loan from the bank, and then they can't. So there is a happy medium between being able to show that the business has made money, but not unnecessarily paying in tax, and this is where tax planning comes into play. So tax preparation is the compliance component. It has to happen every single year, but it does not mean when it happens that your professional is taking the necessary steps to plan out everything moving forward. Now, from a planning perspective, you're gonna wanna make sure the whole goal of tax planning is forward-looking versus tax preparation is looking at the past. So when you're doing your tax planning, you're looking at, okay, this is how much income I'm projected to make. What are some systematic ways that I can make sure I reduce my taxes as much as possible so that way the IRS doesn't get more of their fair share than necessary. So there's six areas that you're gonna wanna look at. And the first area, as a business owner, and this is why I said to my employees, if you're just a normal 9-to-5, you wanna start a home-based business because you can now start tapping into this. So there's 6 areas. The first area is just deductions. So there's so many different deductions that you can take advantage of, but that first one is deductions. So even as simple as being able to write off a portion of your rent or your mortgage, being able to write off your utilities, being able to write off certain things in your particular financial situation that you're using, you now can deduct that to lower your taxable income. The second way is legal entity structure. So I won't get into all the weeds of the different entities, but just know having the appropriate business structure and entity structure is important. Many people choose the limited liability company or the LLC because it's a simple one. I don't practice law. I'm just a business owner myself, and I do everything to reduce my taxes and protect my liability. However, you have to understand, if you choose that entity structure, how am I going to be taxed? For the LLC, because it's so nimble, it can be taxed so many different ways. It can be taxed as a C corporation. It can be taxed as an S corporation. It can be taxed as a sole proprietor. It can be taxed as a partnership. It's really important that you know, if you're an LLC, how you're being taxed. Furthermore, it's really important that you select the correct entity and that you plan for that. So if you're XYZ entity at the beginning of the year and then you start doing planning, because preparation isn't going to do this. The whole thing with preparation is getting all right, file a return, it's done, peace. Versus planning, you're being proactive. So preparation is reactive, planning is proactive. But when you couple planning with preparation, that's how you make preparation proactive. So with the legal entity structure, that's one. Now, as an employee, you have different retirement deductions and retirement accounts that you can take advantage of. But as a business owner, you also have different strategies that you can take advantage of as well. So just simply doing retirement planning, whether you're doing a 401k, SEP IRA, simple IRA. These are different retirement strategies you can do. Profit sharing plan, KEO plan, 412E plan, so many different variations of plans so that way you can reduce your taxable income, and that comes into planning. Another one is just insurance. So making sure you have the proper amount of insurance, but not necessarily insurance from the standpoint of, oh, I need to just have typical insurance, but no, how can you make sure you systematically, for your health insurance, your life insurance, your disability insurance, as a business owner, set up fringe benefits that's going to benefit not only yourself, but your employees, but depending upon how you're structuring it, you can get the tax deduction and the write-off and get the benefit today, right? So that's another one that comes into planning, right? So the point I'm making with the whole planning is this way more detailed than this preparation. There's a few others that I want to really quickly cover. The next one is just different loopholes. I'll break a loophole down really quickly without going too far in the weeds of it, but I'm in Atlanta, Georgia, but Augusta is in Georgia as well. Now, many people don't know that there's something called an Augusta loophole, which allows you to deduct a certain amount of money from your tax return when you structure correctly. That's just one loophole, but there's several other loopholes that one could take advantage of that's not illegal. It's in the IRS tax code that allows you to reduce the amount of money that you're gonna pay in tax, okay? So one other one is niche specific strategies. And when I say niche specific strategies, really what I'm referencing is what your industry is as a business owner. For example, if you happen to be in the restaurant industry, or you happen to be in the hospitality industry and you get tips, many people don't know that you can get, these business owners don't understand that you may be eligible for a FICA tip credit. How do we plan for that to make sure we reduce our taxable income? Or if you're in real estate, you may have heard of or be familiar with 1031 exchange, 1035 exchange. How do you take advantage of those to reduce taxes, right? How do you make sure you structure that? Or if you're dealing with retirement accounts and insurance, there's something called a 1035 exchange. So that's when I say niche specific strategies. So these are the common ones that you can take advantage of, but you want to be doing that throughout the year. So when you're putting together a tax plan, it's not only figuring out how much your income is and how much your expenses are, it's really getting into the nuances of how your life is, and then making sure your lifestyle is structured in a way to reduce tax as much as possible. And one last thing, and I spoke about this before, when it comes to you as a business owner, the biggest thing about if you're trying to get money from the banks is how much do you show in profit, and then how much of that profit is what you're going to be able to get loans from or loans for. Having said that, many people don't understand that when you're doing planning, once you have your tax plan in place, it's so important to ensure that now whoever prepares your taxes takes all of these things into account. But when you just get the tax preparation piece knocked out and you're assuming, and I know I did, you're assuming that your CPA or the person that's preparing your taxes does this, but my question to you is that if they did it, if they do this, they would have did it already, right? Really what they're focused on is the returns. And one key thing that's really painful is, and I said this before, I paid more in tax because I wasn't into the nuances of understanding tax preparation versus planning when I made $500,000 than I did when I made well over $1 million. There's a huge issue there from my perspective. But the discovery I had was one was when I was just doing preparation. The other, when I made well over $1 million, I was doing planning, right? And that's the key thing. So as an entrepreneur, as I wrap this up, when you do the planning and you do the deductions correctly, there's something called add backs, which means depending upon who your bank is, they could add back some of those deductions that you took to lower your taxable income towards your profit number. Thus, you reduce the amount of money that you pay in tax right now. You get access to the working capital to grow your business, but you don't necessarily have to pay the real tax for that particular strategy and that particular deduction. So that is a quick overview of tax planning versus tax preparation. And my suggestion, especially if you are an entrepreneur, is learning these strategies and knowing the difference and not taking your accountant or your CPA and assuming that they're doing this, because my CPA wasn't doing this. And then I had to figure it out, right? They're focused on looking at the past versus a planner. They're focused on making sure they help you plan out the entire picture. So if you want to learn more about how you can put yourself in the position to make sure you have a solid, not only understanding between tax preparation but tax planning, but also a plan to make sure you reduce your taxable income as an entrepreneur, so that way you can, instead of paying that money to the IRS, put it towards your business, put it towards your retirement account, put it towards a trust fund. Feel free to take the next step below this video, and my team and myself will be here to walk you through step by step what you should do. Click that link right below this video and we're here to help you out.